Hello guys, I hope you're sharp. Today we're just gonna have another analysis on Nasdaq because I just wanted to be like a follow-up analysis on what we had 2 days ago, right? So our prediction was, as you can see the drawings here, was that the price is gonna react and then drop all the way to the downside, of which you can see it did exactly that. So if you don't believe me, you can just go and watch this video here that I can see that I posted 2 days ago, and you will see all the reasons why we came to that conclusion. Yes, sometimes you can see the price, making stuff like this, giving you higher high, but it's just a higher high. You need to be able to differentiate a higher high and a bullish trend, right? So you need to be careful there. So that's something that I teach even the guys that I'm mentoring. Show them how to differentiate a higher high and a trend and stuff like that. Yeah, man. So today we're just gonna analyze it from where it is. So if you haven't subscribed, please do so that each time when I put a new video, then YouTube can just suggest it to you, right? Now let's get started. So we always start with the highest time frame, even though we had our analysis not so long ago. So the highest time frame are gonna look the same as to like the previous video, right? So we're not gonna waste a lot of time here, right? So this is how our thing looks. This is how our monthly looks like. We're just gonna run through it quickly. The monthly is bearish. We have a bearish trend line. We are bouncing from a resistance and a bearish trend line. We broke this support. The main target is to come here. It might not go there, but I always tell you, as things stand, we have a very high chance of going down there. For as long as the price does not play outside the trend line or it does not break the resistance. If it doesn't do that, it will remain bearish, which means it will has a chance of going down and touching a support. That's just the drill. And you can see that this month is gonna end, which means we will end with what? It's about to end. We will end with the bearish engulfing, and that is also a reversal pattern, which suggests that the bears are still showing some momentum. They could continue in the next candlestick, and that's when we'll be approaching this support. That's it. That's all that you need from this highest time frame. Obviously, when you're trading your H1 and your other time frames, the smaller ones, you can get your bullish trends and stuff like that. For as long as you know that those trends or those trades, the buyer ones that you're getting, you're going to use the structure on those time frames where you executed from and you exit there. You're not going to take a buy trade all of a sudden you want to tell us that you will close it next year June, because once you see that, we need to see you need to have a backup from things like monthly, because you cannot have a long-term plan but yet a higher time frame does not agree with it, you see. So you can have those buy trades, but they are not for long term. Keep that in mind. And let's do weekly also still the same as to what we had the other day, which is a bearish trend line, bearish trend, resistance, reacting from it. Same thing, we are going to the downside. I said we're gonna struggle to pass here, right? But keep in mind, this is not a zone. That's why you need to be able to, like I was saying now, you need to be able to differentiate a swing low, a swing high from a resistance and a support. You need to be able to differentiate a trend from a higher high and a higher low. Just because the price is doing this doesn't always mean that it is in an uptrend. Just because the price did this does not mean you have a support there. Keep that in mind. So I'm not gonna go into deeper detail. That's something that I unpack in the mentorship, right? So we're gonna struggle to pass there, but we have a chance of breaking it simply because of what we saw on the monthly as having that bearish engulfing that's forming. We can end up with, maybe even if it reacts, it can do that, but it's most likely gonna break it, but we will see how it reacts when it gets there. So here there's nothing much to talk about. So let's check the daily chart. This is our daily chart, and the bullish trend line was long, broken, and you had your areas of resistance forming when the price is going to the downside. So here, if this candlestick is to go down like that and maybe break this, right, it means now you will say that all that area where we had said that the price is going to struggle to pass, now it has passed it, and now you'll just locate the nearest resistance and say, should the price pull back I can go in and sell there. Because remember, just because the price is bearish does not mean the price has to move like this. No, it will always, this is a safer trend. This is a very much safer trend. So your goal when the price is going to the downside is to target the pullbacks and then try and catch it from here, because the goal is to sell high, buy low, right? So when you see the price is dropping like this, you can see it's been dropping for a couple of hours, days, or months, depending on the time frame that you're looking at. So it doesn't help in you trying to use this very same time frame and then execute here and see you're selling. But you can see the price has been falling for a very long time. Don't you think that now it could have a small pullback or a deeper one, just rest before taking off? So that's why entering like that is very risky. So it's always safer when you're waiting for what? A pullback. The same thing that we did when we were talking about this one, because of what we were talking about this as a pullback. Instead of saying it is dropping, let's sell. You see? So when the pullback happened, it went to a significant structure, which was a bearish trend line. So that's why when it gets there, when it got there, we were, so adamant to say, let's sell. You see, because of the location. That's what you should do. You must always wait for the price to get to the level or an area where you feel like it's going to struggle to pass. Then from there, you can do what you can execute from there. You see? So even that's why I'm saying we're going to struggle to pass from where we are, but there's a chance of us breaking these levels. So daily, still very much bearish. You can even put a bearish trend line there if you like. So when you have that as your nearest resistance, this one here, it means if you're someone that's executing on daily, you'll be waiting for the price to break this, then you can start to buy. Because currently you don't have a chance. If you're trading on daily, you don't have a reason to buy. But some that are trading maybe on M15, you'll find that they have a reason to buy and stuff like that. But you need to make sure that you stick to your time frames, the one that you decided that I'm going to trade on this. You must never force trade to a point where you even go to M1 just so that you can force that trade. Pick your time frame, stay there, wait for the condition on your time frame to align, then you pull the trigger. No need to rush. So let's check H4. This is our H4. On the H4, we're still very much bearish, and you can even put a bearish trend line there. We have a resistance there. Now, this is a resistance where you can even plan the same thing like that. But now keep in mind that the resistance that we have, it's not strong. It's not a nice one. So which means you need to make sure that you enter with what? Confirmation. If you decide to sell there, because of what, you're still very much bearish, it's within your rights to sell there, right? And again, the reason why you need to wait for confirmation is that, remember, the price now is inside that around that level on weekly and daily that I said it's gonna struggle to pass. Right? So what if the price now, when it is going up, let's say it goes up to your zone, what if this is the price reacting from that level and it ends up doing something like that? So because you don't know and the location says to you there's someone that could push up, so because of that, when the price gets to your zone, because you don't know whether this is just a pullback or that zone is pushing up, you're gonna wait for confirmation. That's how you get to decide whether you can just go and place a limit order or you can just wait for confirmation or execute instantly and stuff like that. You need to look at the structure and then use that structure for you to decide whether you're going to go in now or you're going to wait. That's how you should do it. So now if you're on your smaller time frames and you get a chance to buy, remember you're exiting here, which is also going to be around the trend line, because of what you decided that you are using. That's what I was saying. Now you need to pick your time frames. You decided that you're going to execute, you're going to use H4, right? If you're someone that decides to use H4, it means when you're setting your take profits, when you're making your decisions, you'll be using that structure there on your H4. Here you get a buy, it's a short-term one or a smash and grab, simply because the trend here is bearish. So that smash and grab is just you trying to accompany the price to the next structure, which is that resistance or that trend line, then you're out. Or you can even move to break even if you don't mind losing, because when the price gets there, it can still continue with its downtrend. So to make sure that if it does that, it doesn't, take something from you, to make sure that now you've hit the next opposing structure, the price is there, then you move to break even. But if you're still trying to grow your account, the best thing to do would be you saying, now the price has hit the resistance, or it has hit the bearish trend line, let me just go out. Then if you are there saying I move to break even, and then you see it break into the upside like that, then you will say, aha, now the price is no longer bearish. Nah. There's a lady that likes to say nah. What's her name? Gisele. So when the price breaks that resistance, nah, you will say now the structure is bullish. So if it's bullish, it means now you already have a buy trade from there. You just say, oh, for me to add more buy trades, I'll just wait for a pullback. Remember, we are targeting pullbacks. We're not gonna say now we have broken the structures and then we go straight and say we can just buy here. No, we're not gonna do that. This thing has been going up from there. So it's only now that I'm noticing that it's going up and wanna join that. That's too late. So now if you're going to buy there, are you going to place your stop loss this side, or are you just going to place it there? If you're placing it there, I mean, the price was here few hours ago. So now you want to place your stop loss around here, but the price was there 2 minutes ago. So don't you think that it can go back there? You see? So you need to make sure that you wait for that right opportunity where the next impulse is going to start from. Then that's where you pull the trigger, rather than you trying to chase the price. So let's look at our H1. This is not nice. I'm not gonna lie to you. This is not nice. This is not nice at all. Yes, it looks like the price moved from here and to there, but look at how long it took it to get there compared to how long it took the bears to push the price from here to here. Now compared to how the bulls moved from here back to there, you can see that yes, you are pushing up, but I'm not convinced. I'm scared now because of what the way you are moving. There's no that aggression that I want, that shows me that whoever that's pushing up the bulls are aggressive enough for me to try and join them and hope that they will continue with that movement. Now when they are doing this, no, I don't. I do not trust them. I do not trust them. All right. So now, if you're trading on H1, you will say, because the location, maybe you are someone that likes to take a risk, and then you're seeing the pin bars here, and then you decide, I mean, I'll just place my stop loss here, which is gonna be very small, and then I'll target the next opposing structure, which is this guy here. Then you're out. So you can see here that the trend line is here. So each time frame can have its own structure. So now here the price is outside the trend line, but the way it moved to the other side of the trend line, it's not like a movement, something like this or something like that. It just crawled to the side and ended up being on the other side of the trend line. So very risky, that one. But anyways, we are outside, and you can say, let me try and see what the price is gonna do if it gets here. Whether you wanna try, take your chances, but I'm not happy with how it moved to the other side. But you can just monitor how it moves there. But again, it needs to, if maybe they were to continue with their crawling and then break that, then when you come here, you will have more odds. If they go back now and you are looking at how they went up, it's not something, doesn't look good for the buyers at the moment. It doesn't. It's like they are not sure of what they are doing. So that's why they can do this for 10 hours, and then the bears with just 1 hour, they end up doing something like this. Is because you were just there accompanying their price to the next opposing structure so that they recharge, and then they continue with their trend. So that's what I'm saying. When you know that the trend, like when I was explaining on H4, you know the trend is bearish. So when you're taking a buy trade, it's a short term. When you hit the next opposing structure, you need to go out because it can just continue with that trend. So that's basically my view on US 100. So you need to make sure that if you decide to take your chances here, you need strong confirmation there, because I'm not happy with how they did this. But at the same time, when you decide to sell also, remember we spoke about it on H4. When you said it gets there and then the trend line is still there, you decide to sell. You need to also wait for confirmation, simply because we said this is not a good zone, and the location as being around that level, I said it was going to struggle. So you need to wait for confirmation. So at this point in time, you get confirmation that the price could be, it could drop. Maybe you are at the resistance or you're at a bearish trend line. You get a signal that suggests that the sellers are becoming aggressive. Then you can enter. But without those confirmations, it's gonna be very tricky for you. It's gonna be gambling, and we don't like to gamble here. That's why I always give you the setups or an analysis, or that when I give you all the reasons why I think we most likely to do this or that. I give you all the reasons. I don't just open the chart and say let's sell here, let's buy there. You will never understand what I'm talking about. All right, that's it, guys. I'll see you guys in the next video. And please do not forget to like. If you've watched until this point, just like the video, or comment on what maybe I should cover next. Yeah, then we'll take it from there. But otherwise, I'll see you guys in the next video. Thank you.